Hey everyone, happy Monday. Welcome back to my channel and another Monday market update. I'm Caitlin McKeag. I am a real estate broker here in Phoenix, Arizona. It's May. I can't believe it. We're already getting into the 5th month of this year. It's just been flying by, and boy, do I have some things to share with you guys because the market is definitely changing. We are for sure heading on a softening trend. Now, how long that continues, that's anyone's guess. But right now I have some really interesting data to share with all of you. So thanks for coming by. If it's your first time, make sure you subscribe. I'm here every Monday giving an update on what goes on in the Phoenix real estate market. And if you're not new here, thank you so much for your support. I appreciate you coming here and watching my channel every Monday. And I do want to say thank you to the Cromford report. I am a subscriber, and that is where I get the majority of the data that I'm able to share with all of you. So thanks to them for looking at the MLS, bringing all of this data to the surface and allowing us to share this with our clients. So let's jump right in and talk about what's going on. I've got my new whiteboard here, and you'll notice there is a little bit of a watermark on it this week. Thank you to the subscriber who shared that someone else was using my whiteboard. Thanks for keeping an eye out. If anyone else sees that on anyone's channel, please let me know. None of this information is proprietary. However, my whiteboard is something that I've created, so it shouldn't be used by others. Okay, so let's talk about home price appreciation. Okay, we've seen some crazy appreciation rates here in Phoenix over the last 2 years. That's no surprise, but we have changed where we sit on the Case-Shiller Home Price Index. When you're looking at month over month home price increases, Phoenix actually moved down. We moved down to number 10. We were at number 7 and now we're number 10, but we still have had a 2.24% increase, and the average was 1.73% increase in home price appreciation. So, we're still looking good. We're higher than average. Just month to month, we've started to fall on that chart. Now, if you look at the year over year home price appreciation, we are number 1 in Phoenix for the 33rd month in a row. So year over year, it's a different story than month over month. We had 32.9% home price appreciation in the last year, which is insane. The average across the nation was 19.8%. So we really blew out that average and sitting at the number 1 spot for 33 consecutive months. We'll see how that changes because, like I said, I have some interesting info to share with you guys as the market is starting to change here. So one thing that we have struggled with in our market has been supply. It's still very low. It's been low for a long time, as we've been in some kind of a seller's market for the last, what is it now? Almost 8 years or so. But we are starting to see new permit numbers increasing. So the last count was 3,841 new permits. That's the most new permits that we've seen since May of 2006. So that's a pretty big deal. Now, the question is supply constraints, labor shortages, all the things that we've been facing. This is a great number of permits to see that we're ready to build more homes throughout the Phoenix area, but how quickly will those be built? That's my question, just because I know that we're starting to see or continuing to see all of these factors in and bottlenecks in actually building here. So that was some interesting news. That's a lot of new permits. Let's swipe over to our next page. The CMI. Okay, you guys, it's just right here, so I'm gonna go into it right now. We are finally below 400. And if you're new here, let me explain what the CMI is. It's the Cromford Market Index. It is, again, from the Cromford report. It's a proprietary algorithm that they've created that helps us see the supply and demand factors in our market. And it's the first indicator of where prices are heading. So as long as this reading, this index on the CMI is above 110, it means we're in a seller's market and prices will continue to increase. If that number is below 90, it means we are in a buyer's market. So 388 is still very high above 110, but you have to remember we were close to 500 and shooting upwards as we started this year. And now that has decreased, fallen through the 400s, and it's accelerating for how much it's going downward. And I'm going to talk about that in a second. So I just had to, address the elephant in the room here of 388. I know you guys are looking at that, but let's come up here first. I want to talk about the changes here in the CMI. So the average change over the last month was 15.3%. So that number went down by 15.3%. And before that, last week's average change month over month was 12.6%. So I said that it's accelerating downward. That just shows what is happening there. So we'll see what next week looks like, if that change is going to be even more than 15%. But clearly we're going down in bigger leaps on this CMI. Now, these cities over here, Cave Creek, Peoria, Paradise Valley, and Buckeye, those are the cities that have seen the largest decrease in their CMIs as we compare to previous weeks and months. So those are trending downward the fastest. So let's look at these dials here. So 388, again, we're still in a seller's market, you guys. We're still well above 110, but man, does that look weak compared to 450, which we were at not that long ago. And last week when I reported on this, I think we were at like 406 or so, maybe 410. We were still in the 400s, but man, this has dropped off pretty quickly. Now, demand, this has been dropping consistently. If you've been watching my channel for a bit, we are technically in the normal range for demand. Anything between 90 to 110 is considered normal. So even though, it looks like we're slightly above normal since we're over 100%, we're technically in the normal range for demand, which I haven't been able to say for a while. And our supply index over here, this is showing that we're about 74% below normal for supply. However, that's another number that's been increasing. Earlier this year, it was around like 23, then 24, went up a little bit. We've started to see it tick up even more in the last 2 weeks. I think we were around 25, now we're 26.3. It's just creeping up and creeping up. So the combination, the most important thing to understand here is the combination between our demand going down and our supply going up is really what is dropping the CMI, right? So those two factors are coming closer together, which ultimately puts us towards balance. So that's where we're trending right now. Now, let's talk a little bit more about supply. We're seeing the largest spike of supply in this price range here in 500,000 to $1 million. So if you're a buyer in that price range, keep that in mind. You're starting to get some more choices. And here is a graph of active listings because I think this is just the best way to show you. The red line is showing 2022. So you can see that red line has totally broken away from the blue line, started to spike up pretty significantly compared to the trends that we've seen over the last couple years. The blue line is 2021 and that brownish colored line is 2020. This situation over here, that was the start of the pandemic where we had a lot of listings and no demand. All of a sudden everyone kind of froze, so that spiked up. But then, we came back down and continued the rest of the year low. Last year, we just really didn't see much change in supply at all until the end of the year, and that wasn't even a huge increase. But now we are totally breaking away from the trend here, starting to go upwards. I don't know if that's going to continue, but clearly we're seeing an increase in supply, which brings me to this next chart here because it begs the question for me, if we're starting to see more supply and our demand is going down, how is this affecting the listings on the market? And it is. These are the price changes per week. So this is looking at price cuts on active listings. So there's a difference between prices going down and listing price reductions, right? So this is only looking at homes that are currently on the market and sellers who have cut their prices to get more buyer interest. Maybe they started a little bit too high, or since the demand's gone down, they don't have the luxury to list quite as high anymore with that kind of interest. So we are seeing an increase in list price reductions. You can see this is these bars have consistently been ticking upward. So that's interesting to see. I mean, we're starting to see more supply. We're absolutely seeing more active supply right here. That's a huge change. And now with that, we're starting to see list price reductions. So if you're a seller, it's important to know that pricing your home is going to be really important to price it appropriately, right? Like those days of, shooting for the stars and still getting a few people interested may be starting to disappear. I'm not saying by any means that prices are dropping or, we're in a bad situation at all, but price is going to be really important, because if there aren't a lot of buyers competing against one another any longer, you don't have as much leverage to get those really high prices and still have some bites. So that's an interesting trend I definitely want to continue to watch. Now, finally here, just wanted to give you a visual on what's going on with the CMI. So the yellowish line is 2022 and the blue line is 2021. And it's important to see, like in 2021, we went down too. This is not anything new. But you can tell this is a little bit of a steeper drop here. It's absolutely some bigger drops, because you can see the distance between these dots is pretty large as compared to these, because every dot is a week. So we're seeing that we're gaining more momentum as we're going down on the CMI now. But what's going to happen next? Are we going to do something like this and just level out and then come back up? Or are we going to continue to go down and actually get to a balanced market? It's really hard to say. I think it's interesting to compare how we've gone down, how we went down in 2021 without the factor of interest rates increasing as much as they have now. And so knowing that this has happened before, but without that large factor, it makes me wonder if this is going to be a more consistent trend where perhaps we're not going to level off so high up here. We may level off a little bit lower by the time we get there. I don't know. It's really hard to say. And it's also important to note that the Cromford report always says that you can't predict the CMI. The CMI is the predictor of everything else. Everything else is a trailing factor. What the CMI looks at is what's happening right now in our market. And so it's predicting what we're going to start to see in prices in 30, 60, 90 days, 6 months, whatever it is, because that is, the CMI is the leading indicator. Prices are the lagging indicator. So one thing I wanted to read directly from them, and I have it here, prices will continue to increase. This is what they say about the dropping CMI, and much better to put it in their words than mine. So although the market is cooling, prices are still on a strong upward trajectory that will be maintained for several months at least. Supply is increasing while demand is falling, but the gap is so large that it will take a long time for these two elements to achieve balance, even if the current trend continues. So I say all that to share that although things are definitely changing, we are certainly seeing a softening in this market. It is really not anything to be alarmed about as a seller, and as a buyer, it's nothing to think that you're going to, come in and scoop up every property like it's 2009. We're not headed for a crash based on what we're seeing at the moment. It's just that we've really lost a lot of demand and we're starting to see more supply. And so things are beginning to soften a bit and maybe move towards a more stable market. You have to remember too, we've been in a seller's market for a long time. This is all we know. But even, in 2018, when we were in a seller's market, it was not as much of a frenzy as it's been the last 2 years. So it's probably healthy for us to get back to a little bit more sanity in this market. So that's what I've got for you this week. I hope that information is helpful. If you're a seller, don't freak out. But if you're thinking of selling your home and you want to know your home value, click below. I have an instant home valuation. And don't forget, it's something I can help you with if you want to speak further. So feel free to contact me anytime by call, text, or email. And buyers out there, hey, it's not a crashing market, but it is softening a bit and you may have less buyer competition. So it may be the right time for you to buy, assuming interest rates and all of that good stuff is not affecting what you want to purchase. So take a look at my MLS. I have a link to search for homes there directly. Thanks so much for watching this video. I appreciate you all so much. If you have any questions, reach out to me anytime by call, text, or email, or just drop a comment below. I'll be back next week with more market updates. I'm Caitlin McKeag with the Desert Dreamers team at HomeSmart.